What's going on, guys? Welcome back to another inter-equity trading video. Today is going to be another video on daily bias. The reason why I want to make more of these videos is because this is probably what people struggle with the most. Going into the lower time frames, finding entries using patterns or models, it's not that difficult. Okay, we all know that. What is difficult is being able to identify direction and finding that daily bias consistently. In this video, I'm going to simplify it as much as possible. Check it out. All right, guys, so how we're going to structure this video on daily bias is I'm going to list all of the components, all of the, I guess you could say, confluences I use on a daily basis in order to find my daily bias. Almost like a routine in a sense, but to start off, we're going to talk about any fundamentals. What do I mean by that? This means what news events are supposed to occur this day. So I'm going to give you an example. Let's just say you hop on the charts. It's a Wednesday. You open up whatever sort of news website or articles you use, and let's just say there's news 8:30, red folder news at 8:30 a.m. Automatically, and again, this is very important for daily bias. Why? Because it tells you when you can trade. Okay, so automatically, if we have news at 8:30, that means I will not be trading until that news event is released, aka until it's 8:31, 8:32, 8:33, after the news release, okay? And that's very key. So that should almost be the very first thing you should focus on. The second step you need to be focusing on is always making sure you start on the higher time frames. Okay, this is a common mistake amongst the newer trader, I guess you could say, where they hop on the charts in the morning. They use the higher time frames. They know they should be using the higher time frames, starting off on the daily, 4 hour, 1 hour, whatever it is. They don't have a good idea of where the higher time frame is heading to, yet they still hop on the lower time frames. Big mistake. Okay. And that should be a rule in your plan right away. We can make separate videos on this in the future, but something you need to keep in mind is if you don't know where price is heading on the higher time frames, do not head to the lower time frames. So that would be my second step to finding my daily bias, is making sure I start on the higher time frames. Now, what do I do on the higher time frames? We have to identify where liquidity is. Now, what do I mean by that? That could be in the form of any sort of liquidity, right? I mean, go into my previous videos, you can see whatever liquidity I talk about. It could be a form of equal highs. It could be in the form of some sort of channel like this. Whatever you want to identify as your liquidity, you need to be marking that out on the higher time frames, okay, before heading to the lower. So marking out specific highs, specific lows, okay? Now, the next thing you want to be asking yourself is there a trap occurring? And I'm going to have like a little second part to this. Who is induced? What do I mean with these two new questions? Is there a trap occurring and who is induced? If you go into my previous videos, you can see I go into depth on traps and inducements as a whole, but to give you a quick little shortcut / summary, what do I mean by that? I mean, let's just say we are currently trading at this high up here, all right? And I understand we have taken out this high. I view this market as buyers being induced, okay? I do not want to be a buyer. So right away, that answers this question for me. Who is induced? Buyers, aka I do not want to be looking for buys. So right away, I already know if I want to short, if there's a reason to short, aka if there's some liquidity on the higher time frames for me, then I'll be looking for shorts. And it answers this question right away. Who is induced? In this scenario right here, buyers would be induced. Is there a trap occurring? What do I mean by trap? So let's just say we're moving to the downside. We take out previous low. The market comes up, takes out this high, yet there's still a higher time frame drawn liquidity to the downside. It could be, again, any sort of liquidity to the left-hand side. Let's just say we have equal lows like this. Okay. Now this is the question you guys need to be answering. Is there a trap occurring? This is a trap right here. We have taken out this high to induce buyers. So let's just say you hop on the charts. It's New York session and price is trading right here. You need to be answering the question that buyers are induced and there is a trap occurring. Okay, because since we have taken out this high, we view this now to be a trap. Okay, and these are things you want to be able to identify. Again, of course, starting on the higher time frames and working yourself down to the lower time frames. But these are specific questions you need to answer when you're on the charts, okay, to find that daily bias. Next, what did Asia do? What did London do? And in my scenario, because I'm just going to talk from my experience, I'm a New York trader. I typically only trade New York, okay, unless I have a higher time frame entry. But again, that'll be for future videos. What did London do? And then finally, where can New York head to? What does this all mean? We're going to talk more about this on the charts, but just for example purposes and to keep it as simple as possible, I don't want to overcomplicate anything because I know there's a lot of daily bias videos out there and a lot of theories, and I feel like it's very overcomplicated. Again, keep it simple. If Asia built liquidity, London was kind of sluggish, consolidated build, then what could New York do? If, let's just say, we have an example like this. All right, we have a form of liquidity to the downside and there's some highs left over here. And we're going to go into the charts to discuss more of examples. But let's just say Asia sells off. Now, since we've had a big move like this occur, you can't just anticipate the market just to fly back up right away. Okay, Asia has a sell off to the downside. Maybe London has a buildup of some sort, takes the low out again, and then New York opens up. And let's just say you open up New York session, we're trading down at the low. You've asked yourself, what did Asia do? We had a sell off to the downside. What did London do? We built liquidity. We ranged below old lows. What can New York do? Okay, since we have taken out lows to the left-hand side, we have a draw on liquidity to the upside. You can maybe predict that New York is going to go bullish the rest of the day. Okay, so that's just an example of asking yourself, what did Asia do? What did London do? And where can New York head to? Of course, this is an example for myself, right? I'm a New York trader. For you guys that trade London, I mean, you want to hop on the charts and just ask yourself, what did Asia do? Now that we've gone through all of my confluences and kind of questions I ask myself when I hop on the charts, now we're going to hop into a direct chart example. What do I have in front of us here? This is NQ. And what did we talk about before? We always want to start on the higher time frames, okay? Because your analysis always needs to start from the higher. You need to understand that the lower time frames are irrelevant until the higher time frames make sense. Do not get stuck on the lower time frames because they will kill you, okay? If you have some sort of entry pattern or entry criteria, it'll continuously get disrespected over and over and over if your higher time frame is incorrect. That's why I preach to you guys, start on the higher time frames. It's necessary. I already have this high marked out for you guys, okay? Just to keep it as simple as possible. Now, why do I have this high? Price, and this is, again, look how simple this can be. This is marking out draws on liquidity, equal highs, whatever you want to call them, on the higher time frames, right? We just spoke about this. This high is marked out 24,310. We have tapped into it. What do I mean by tapped into that? Just traded into this high, right? I can draw it like a little box. Tapped into it and we sold off to the downside, okay? We moved away. You guys should already know that this is going to be a form of liquidity and it's going to be a target for the future. That's why I've marked it on, okay? And it's as simple as that. That's identifying liquidity on the higher time frames, all right? As a possible draw. Now we're going to open up the 1 hour and make more sense of this. Look at what happened. We had this big sell-off off the back of this high, taking out anyone buying above these lows. What does that mean by buying? Look at this. And we're going to bump down one more time frame to make sense of this a little more. We took out this high here, okay? Printing a new high in the market. Price retraced back to the extreme, respected these regions, respected these lows, and built liquidity at the lows here. So that tells me buyers entered positions here, okay? In here specifically. Look what the market does. We move up to the upside. This is not a bullish move you want to be involved in, by the way. Bullish move to the upside. So big sell-off on the Wednesday. We're going to be breaking down Thursday price action, okay? But again, the important part here is we've respected this high on the left-hand side, sell off to the downside, clearing this liquidity. And we continuously hunt for some lows on the left-hand side here. We don't really need to identify the exact bottom. I won't lie to you guys. This price action over here isn't too clean. It's not clean enough for us to identify where price can stop. Okay, and that's completely fine. Sometimes price is going to have a lot of internal points, and it's not easy to identify which low needs to get ran, right? What's that last low, that last liquidity point? So you just let price print that low, and then you trade price afterwards. This was the previous day. So the previous day had a big sell off to the downside. This is on Wednesday. We end up closing up at the low down here. Asia, and this goes back to what we were just talking about, okay? These questions you need to be asking yourself in order to find that daily bias. Asia, what did Asia do? Honestly, for all of Asia and London, look at this. We built. That tells me there's probably going to be a big move cooking up for New York, okay? Because this is just how the market works. If we're not moving a lot in Asia and London, typically New York is going to have some sort of move. Now, we need to figure out what that move is going to be, obviously. But this is a green flag, you could say. However, there's sometimes I hop on for New York. London had a massive move. I'm talking like a big higher time frame move. Right away, I understand that my daily bias, some of you may laugh, my daily bias is going to be don't trade. I understand that the market can't move so much in a single day. So if London had a very big move, New York typically won't have a move following it. So I'll sideline myself and I won't trade that day. In this specific scenario, we had Asia build liquidity, right? If you look at my crosshair on the bottom, Asia built all in this price action. Finally, London had a little bit of a bullish move, inducing buyers. And this goes back to us asking the question, who is induced in the market right now? Buyers are induced. So you can draw this out as a trap. And then you can also draw this out as a trap. Why? Why can I draw this? Very simple. Price took out this high. We got a retracement back to the low and we went bullish. So now this goes back to us just identifying simple liquidity points. Since price had this big sell-off Wednesday, we understand on the higher time frames, sellers are induced. And look at all the liquidity left for us. Price is currently sitting at 6 a.m. I'm currently not on the charts at this time yet. I'm going to play price forward a bit. And we're going to head closer into New York session. Okay, so now I fast forwarded it to 8 a.m. New York open. This is when I'm typically hopping on the charts. So when I'm hopping on, I really want to have a good idea of what price can be doing for the day. What do I mean by that? Is there fundamentals? This goes back to me asking myself, what did Asia do? What did London do? We've already marked out these things, but again, I'm always asking myself these things. And of course, is there fundamentals? Because I already know there was fundamentals at 8:30 a.m. this day, so we can mark that out. Which means, look at this, right? And this goes back to what we were just talking about. I will not trade on the left side of this line because this line right here represents a red folder news event. I will not trade any of this price action. I already understand it's low probability and I do not want to be involved in that PA. Okay. I will only trade once the news event happens. So essentially to the right of the line. We're on the 5-minute chart, so it might even be on the line in this example. But what I'm trying to say is do not trade on the left side. And that automatically is very powerful because it tells you when to trade. Now again, news event 8:30 a.m. We've identified that we have a lot of liquidity to the downside on the lower time frames. The higher time frames has induced sellers by having this big move down, trapping anyone at these lows, which tells me I want to see price back to the upside. We have this high up here we can use as a target. And of course, don't forget about where this whole setup stemmed from. Remember we talked about this higher time frame liquidity point that we marked on. Okay, very important to identify. We can automatically assume that in order for us to take a buy, we show up at the computer, it's 8 a.m. We need to see price to the downside first. Right away, I'm now bullish. I want to see price to the upside. However, and this is very, very important, I'm not just going to buy to buy. Okay, obviously not. I need to see some form of liquidity taken to the downside. So look, I want to see price lower. Anyone that was buying at these lows will be trapped. They'll be liquidated. And then we have this higher time frame, liquidity block down here. We're going to use that to aid our entry, meaning we're going to place our stop loss below this low. How it's going to look is just like this. Just like that. So we'll take the entry as soon as the liquidity stabbed, stop loss tucked below the low to the left-hand side, always. And we are going to be targeting seller liquidity. Because remember, when we hopped on the charts, we needed to figure out a daily bias. We have to ask ourselves, who is currently induced in the market? This big sell-off, this rapid sell-off to the downside, clearing lows from the left-hand side, induces sellers. We do not want to be a seller. We want to be buying into their liquidity. So if I play out price action, check this out. We get tagged in right off the back of news. So look at that. Again, we do not want to be trading till news gets announced. Perfect. We get tagged in. It moves away. Starting to trade at these highs. And if I go into the 15-minute time frame, it should play out shortly. Boom. And just like that, we take the high from the left-hand side. The high that we plotted from the higher time frames. I want you guys to understand something. The trade itself, the entry, that's not the important part to this video. Okay, I wanted to show an example how I can approach the charts every single day. However, the important part is all of this, what we discussed at the beginning of the video. These are the kind of questions you need to be asking yourself. There's no shortcut to daily bias, guys. Okay, there's not do this, do this, do this. You need to understand it all as a whole and then put it together. You want to build that story and you want to build that narrative on a daily basis. I hope you guys enjoyed today's video. If you did, leave a thumbs up, drop a comment down below, turn those noties on, and subscribe if you guys haven't already. I'm going to continuously roll out more and more and more content for you guys. You guys seem to be enjoying it. We'll see you guys soon.